You agree? Can we see this double in the next 3 years?
It's certainly possible, and I think the point that Bill made and what we'd agree with is Amazon has defined their market pretty much as entire U.S. retail sales or even GDP as they go into new markets. So they have about 7% U.S. retail market share today. Walmart is at around 10%, and we think as they grow voice commerce, which is now used by 25% of Americans in our latest survey, we think they can double their spending per prime household from $2,500 to $5,000. So a double or triple could be tough, but we think it could be a 2,000 by the end of the year. So it's one of our favorite names.
Anthony, what say you?
We have a $2,300 price target on Amazon, and I would agree with a lot of the points that were just made. I mean, they have a huge addressable market. One thing that I think is really becoming interesting about Amazon is they are becoming a profit machine. You are seeing their profits increase at a very fast rate, and there's a lot of different drivers for that. Part of that is a continued growth of AWS, which has over a 25% operating margin. Part of that is the growth of their advertising business. And part of that is the fact that across all three of their businesses, they finally reached an inflection point in which their top line, even though it's slowing, is growing at a faster rate than their fixed costs. So you're getting fixed cost leverage. And so we're very bullish on Amazon right now.
And Greg, one place you've made the point of pointing out that Amazon is actually losing money right now, is not profit machine, is international. Is there a point at which you would expect that to change?
Yeah, we think it can turn in the next couple of years. And in our most recent survey of those markets, we found it was really isolated in China, India, and rest of world. So we think they make money in the UK. We think they make money in Germany. But from a valuation standpoint, I think it's interesting if you, and we don't like to do this as part of our DCF, but people like to play some of the parts math. If you back out the billions of losses in international, your Amazon retail North America trades at around 12, 13 times EBITDA on our next year numbers. So I think you can make a good value argument based on Amazon's potential from a profitability standpoint. And if we can get international to break even or better, I think that'll start to really show up.
And Anthony, though, I think something that's going to be tricky here, speaking of valuation, is knowing exactly what areas are going to be likely to provide that valuation bid. I mean, for Microsoft, it was certainly cloud. Satya Nadella came in and really told a cloud story in a way that allowed Microsoft's multiple to expand. So we've seen that happen on the cloud for Amazon already. What's the next story going to be that investors are going to latch onto that it's going to cause maybe some of that valuation expansion, that multiple expansion for Amazon to really catch hold?
I think that one of the big opportunities for Amazon obviously is in the healthcare market. You did see them buy PillPack last year. You also saw the joint venture with JP Morgan and Berkshire Hathaway. Now, it's still in the very early stages. We don't know exactly how that's going to play out, but that is a very large addressable market that I think is primed for disruption. I would disagree with you a little bit in terms of AWS. I think there's a lot of growth potential for AWS. One thing that we think we're going to hear in the next few months is that Amazon was likely going to win the JEDI contract, so the Pentagon cloud computing contract. And Amazon still has a huge lead over Microsoft and Google, for that matter, in terms of cloud.
Greg, one area that I don't think has been talked about necessarily enough is the Whole Foods acquisition and integration. I got to tell you, I was shopping there over the weekend. New store just opened up. Lots of advertisements for, prime benefits. $200 bill, $4 off. Have they done enough with the Whole Foods acquisition?
They've only just scratched the surface. So I think the point with Whole Foods is I think over many years now you could see them having, they have physical stores now, close to 500. You could see them expand that. But the consumer is demanding multi-channel retail. And even if North American retail is still a little bit less than half of, we think, the value of Amazon overall, it can still be a key driver. And the key to doing that will be gaining share in retail and being multi-channel. Walmart has been successful in starting to use their online and then click and collect. And I think Amazon, the flip side, is going to have to get better at using Whole Foods and doing more direct delivery and handling that last mile. But the key is, if you've got a majority of American households shopping with you every week, and then you can monetize it in other areas. One area I mentioned was healthcare, but I would even say before that, advertising. That's a business that's $7 billion last year. We think it could be 14 over the next couple of years. So there are a lot of areas where they can monetize that great Prime membership base.
And Greg, I want to get your thoughts on the transportation network, the in-house shipping initiatives that seem to be underway. recently ordered 10 more planes from ATSG. They're also investing more in airport hubs around the country. How much money is going towards that? How should investors be thinking about those initiatives as well?
I think those are critical, because if we think about Amazon longer term, at least the retail side of the business, that is a key risk for them. It's that last mile. It's having the capacity out there to handle getting things from any of their distribution facilities to the customer. And I think UPS, FedEx, US Postal Service, in many ways, we're getting maxed out in terms of the capacity to do that. And so the fact that Amazon is adding more and more of their own delivery, this is nothing new. They've been doing that for the last couple of years. That's because to keep up this sort of near 20% growth, they just need the capacity. So I think they'll get it however they can get it. And if they do it themselves, that could be one way to do it.